Hi everybody, Alex Employer from Expert Forex, and in this video we're going to be looking at 6 strategies for the moving average multiplier Forex robot. And just to give you some background, about 2 or 3 weeks ago I made this video. It was extremely popular. There's been 15,000 views so far, showing the make money robot trading $1,000 to $12 million in 6 weeks. Absolutely fantastic. We then went away and we looked at the functionality of the Make Money EA, and we came up with a completely different trading concept that actually achieved much better results. And we created a Forex trading robot called the Moving Average Multiplier. Now, this multiplier has been made available to our clients for a week of beta testing, and so far the results show that this EA is superior to the Make Money EA shown in the previous slide. Unfortunately, the free testing period is now over, and we are getting ready for the launch of the new moving average multiplier in the next 10 days. So what I'm going to do in this video is give you a closer look at this fantastic EA. And the first thing I must say, it is so simple. If you look at the inputs, there are so few inputs, and that's what I like about it. There's so few moving parts. The EA is not running over with settings, only few settings, and in fact, the ones highlighted there on your screen are the critical ones to get right, and I'm going to show you 6 strategies how to get those ones right. So essentially, there is a trend MA, and that is where the EA takes its signals from, and then there's a filter MA that helps the EA decide whether a signal is valid or not, and I'll go into that in a little bit more detail. Then there are the stops and targets that you could use, and within those 4 things are very, very powerful strategies, and I'm going to show you those in detail right now. Now on your screen you can see a chart with a single moving average, and we're going to call that moving average the trend moving average. In other words, that's the moving average that the EA takes its signals from. Okay, and then I'm going to show you, describe basically how the EA works. So what the EA does is it looks at the angle of the MA. So if the angle is pointing up, it's a buy. If it's pointing down, it's a sell. As simple as that. How simple can you get? So what it does, when the moving average is pointing up, it opens a trade on every single candle that it can. So it will open on every single candle. You can control that with the time of day and settings and things like that. But essentially for this discussion, let's say you're opening a trade on every single candle. Each trade will have a stop and a target because the angle is going up and up and up. So you just cashing in, cashing in, cashing in, and that's where the word multiplier comes from. You are multiplying your gains. What traditionally in the olden days used to happen is, oh, there's a signal, I'll buy here, and then you just sit in the buy and travel up. Now with the modern multiplier concept, you buy on every single candle. You just keep on buying and you multiply your gains over and over and over again as you're climbing up this ladder up there. And then suddenly not suddenly, I mean, this is quite a big trend we're looking at here. That's a 650 pip trend. Then the trend says, oh, I'm tired, I'm going to flop over now, and it then goes into a sell mode. And then it's pointing down. Can you see how it's pointing down? And the EA will just take sell, 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 all the way down. Now the problem is, is that at that point you are taking buys and buys, and those buys are open, and then as you start selling, and then you start 80. So those stay open, but they get stopped out. As simple as that. So there's no major risk. If you've cashed in, let's say 20 positive buys and you have three negative buys or 4 negative buys, it's not a train smash at all. So down you go, and the same procedure there. Then up you go, you buy. Down you go, you sell, buy, you sell. It's just the angle of the MA that determines. So that's strategy 1. Strategy 1 says you just use the trend MA on its own with no filter at all. Now, the other thing about this is you can use different kinds of MAs. So if you look at the options, you can use simple. I like the smooth one. You'll see why. And look at that. You can see it a lot more clearly. And also, it's just the angle. The angle stays a lot more smooth during the process. So you can use all kinds of MAs for this particular one, but this strategy alone works beautifully, as you can see on the chart. You go through break-even periods here because you make profits on some of the buys, but also losses on some of them in those areas, but you make huge profits when these trends happen. Okay, so that's strategy 1. Now, the next strategy is to use a filter MA. And the filter MA, and I'll show you how the filter MA works. I'm going to put one on. Now, this MA I have here, by the way, is 6. So remember, the red MA is 6, and it is also the trend MA, the one that does the signals. Now, I'm just going to add here an MA, and we'll give it a different color, make it a nice blue, and we'll make this one, and I'm seriously, off the top of my head, I'm saying 30. No, that's too slow. I'll make it, let's do a Fibonacci thing. Okay, there we are, 30. Okay, 13. So the blue is 13, the red is 6, and now this blue becomes the filter for trades. So how this filter works is that as long as the candle or the price is above this blue line, you can only enter buys. As long as the candles are below the blue line, you can only enter sell. So in this case here, it would not enter those buys, which is a whipsaw. So in this case here, it won't enter those buys, but it will enter those buys because they're above the blue line. Then the minute it goes below the blue line, then you only sell. So it's a way of filtering out some of the whipsaws that happen here. For instance, there's sell. They below the blue line. You won't start buying until the price goes over the blue line. Then it goes into buy mode. So if it's below the blue line, it's in sell mode. Above, and that makes quite a difference in filtering out some of the uncertain trades that happen. Now that is strategy 2. So in strategy 2, you use a trend MA and you use a filter MA to filter out your deals to trade. So you must probably have fewer trades because in a case like that, the trend MA is pointing down, but the price is above the filter MA, so you're not taking sells there yet. So strategy 2 is where the filter MA is slow, is the slower MA. In other words, it's a higher period, and the trend MA, which is actually the entry MA, is fast. Can you see this is faster? It's got a 6 setting. Okay, so that's strategy 2. Now you can do it the other way round. You can make the slow MA, you can reverse the role. So you can go, and I'm going to make that blue. So now in the settings, you say to the EA that this is now, the red is now the trend EA and the blue is the filter MA. So as long as the price is above the filter MA, you buy, and the minute it comes below that MA and the MA is pointing down, then you can sell. So that's a different kind of filter. For instance, there you wouldn't be able to sell because that is still pointing up. Only around about there will you start selling, and you start selling, and so on. So, for instance, here the price goes over the blue, so it's above the blue line, but because the red is pointing down, you don't enter those sells at all. See how it keeps you out of that whipsaw so nicely, and then the minute it goes below the blue line, you start selling again. So it actually keeps you out of whipsaw trades using these. And obviously you can vary the settings on these EAs to meet your particular needs, but you can see how it filters out bad moves. So if, for instance, there, the price has gone up, but and then the MA starts pointing out, yes, you take those trades, and then the minute it goes down, and see how quickly it gets you out of the whipsaw, and away you go. So that is strategy 3. Strategy 3 says that your trend MA, which is the one that enters the deals, is slower than your filter MA. Now, I hope that all makes sense to you. You might have to watch the video again, but that's those. So those are the 3 strategies we've covered so far. So we've covered trend EA on its own, the trend EA with a slower filter MA, and we've covered the trend MA with a faster filter MA. And you can start playing around. I mean, one of my favorite settings is this one. Let's make it 8. Even 7 works quite well, and they're pretty close. I mean, just look how close they are. They really are. You can play around with these things and find fantastic settings for this EA to run. And the beauty is it's a set and forget EA, and it will just do what you tell it to do. So we've now covered 3 of the strategies. So now the question, the other strategies revolve around the size of the stop and the target. Very important, because you can control your losses and you control your income by the size of the target and the size of the stop. So when the trend is changing like up there, and you're going into buys, and suddenly the trend stops, what do you want? Do you want a big stop or a small stop when that happens? And so when the trend changes, do you want a big stop or a small stop? On the other hand, when you are in a trend like this, do you want a small stop and a big target, or do you want a small target and a big stop? I think you know the answer to that. You want a big target because you're cashing in all the time, and you don't mind a small stop. Now, when it starts turning, however, you might want something different. But that's for you to decide which provides the biggest protection to you and the biggest income. A big stop and a small target, or a big target and a small stop. Okay, so as I've explained, the one strategy is a big target and a small stop. The other one is a small stop and a big target. Now, in these examples that I've mentioned here, you need a 33% success rate to break even. 33% success rate to break even. So in other words, you could of 3 deals, 2 can be wrong and you'll still break even. This way, you have a small target and a big stop. You need 66% success rate to break even, because out of 3 deals, you are going to have plus 200 there and minus 200 there. You'll break even. So those are the extremes. And then obviously you have a middle course where the target is the same as the stop and you need a 50% success rate to break even. Okay, so those are the target and stop strategies. So now what you can do is you combine those strategies. So you have a trend only MA with a bigger stop and a stop with bigger stops than targets. You have a trend MA with bigger targets than stops. And you have a trend MA with a bigger filter MA with bigger stops and than the targets, and you have a trend MA with a bigger filter MA with bigger targets than the stops. Getting a bit of a mouthful, but those are the 6 strategies. And then we have a trend MA with smaller filter MA, but with bigger stops and than targets. And then lastly, we have the trend MA with a smaller filter MA, but bigger targets than stops. So you need to go and think about what you would do. Take a chart, put the MAs on the chart, think about, would it be better to have a big target or a small target, and also would it be better to have a bigger filter MA than a smaller MA, or does the MA filter play a role at all? So think about these. You'll be surprised at the different results you get depending on which strategy you use. Now in the next video, I'm actually going to show you the results of those 6 strategies. We're going to do a bit of back testing and that kind of thing, and you'll be able to see whether you were right or wrong. And by the way, all of these strategies are successful. It's just by how much they differ from each other. So the moving average multiplier will be launched in the next 10 days. Please be patient. Watch your videos, watch your emails, that type of thing. That's how we will communicate the launch to you. So keep an eye on that. In the meantime, watch that video that I mentioned earlier on in the video, in the second or third slide. Go and watch those videos to keep yourself up to date on what has happened. But I think this video will help you understand the settings and what makes this EA tick. It's not a complicated EA at all. It is actually the simplest EA that I've ever come across, and also the most powerful at the same time. So from me, Alex Deploy, cheerio.